Welcome to TradeTheNBA.com. This is John, this report is for the 5th of July, and of course, we broke the 3,000. It took a while. 3,006. But as expected, we've now achieved that stellar mark high in the sky that nobody thought was viable. But as I've been talking about it for quite some number of years, but the change in multiple post-war dividend, I know some people will say, well, what does that actually mean? Well, it's just historical fact of what happens to markets after UN conflicts. When we talk about the major end of the Iraq conflict was the beginning of what was supposed to be a post-war cycle. I know that the Afghanistan conflict, but that is pretty much scaled down to just a police action, not really actually doing anything there. So this is the net result where multiples change, and we've been talking about this because everyone's been looking only at PE values, those kinds of things, and missed completely that there was going to be a change in dynamic in this expectation for future inflation based on Fed action, but they're going to price that in now, not later. So this was that pricing now, and a lot of people just weren't ready for it, and they thought that everything was going to collapse, and they just didn't get it. But that's okay. We did. Needless to say, we were on top of this from, well, the beginning of it when we started with the first dip of the orange right back down here, and then we ended up with cyan pretty much under red through a large portion of it. We had a couple of flat stall out periods, but nothing too dramatic because the shakeout kept remaining in positive territory. Then once the gold started on this little area here where we had that little retrace, I was looking at that 76% to hold, and it did beautifully. And then the turnaround move was what we were looking for, and boom, there it is. And we can see this all taking place on the 50K and that as well. We can look at those. Now that we've gotten there, it becomes a different story because you can see like the NASDAQ, which was behind, is just reaching the peaks from before. So it hasn't even broken out to the new high yet, but it's getting closer. So the parity, and this will be interesting because I need a decline that we see taking place, whether or not the S&P is a little more exaggerated than the NASDAQ, and that will give us the parity that's necessary. You can see the Azure is coming close to the gold. That would indicate that we're either going to be at the end of this cycle or start a new up cycle. And I think some of the data is going to really determine whether that's the case or not. So from a Euro standpoint, 50% retracement here from a Fibonacci line filled in the positive extreme from right there. So that was perfectly in line with what our expectations were for that. The dip below the red line here, that's going to be a little more interesting. We'll see if we get a continuation of orange between the cyan and red. For now it is, and if it's able to maintain that. Of course, everyone's so excited about Lagarde as, handling ECB monetary policy, that what could go wrong, right? So I think some people who know better, but the real battle is going to be between the Fed and the ECB because you can see the building pressure for wanting to manipulate U.S. currencies to devalue it some, whereas that's not going to be the case of excitement for the ECB. So that little battle is going to still keep us within the same range that we've been in. And much to do about nothing. 20-year Treasury just completely out of control. This is what you hear, all that talk about yield inversion, and therefore the market must crash. Don't believe it. USO oil is just broken down to the breakout area from the previous pop. This all becomes a question of supplies and whether or not tensions are going to limit them. This doesn't look like it's going to hold up, so I think that we might even see a little bit further retrace unless there's some new specialized tension that we're not aware of. We expected gold to make that return as soon as steel started popping up because we were still looking at cyan deep under red and unable to cross above it. And this was the problem where I was talking about, hey, even if you get the shorts to this degree, they got nowhere to go. And that's what happens on the retrace. Boom, you get the bounce back. No shock with that. It's right in line with our expectations. Just look at that for the 5K standpoint. We've been talking about this even earlier than that. That was the buy that happened down here, and literally nothing has changed from that. I mean, if you follow gold line right there from the long short algo, see that's the long algo test. And I didn't mean to do that. I just activated it for display on the right side just by clicking. Gotta watch those clicks. I'm gonna have to redo that one. No problem, I'll do it later. But needless to say, it doesn't change the movement that we're seeing. So all in all, in fact, I just deactivate it temporarily. We'll get back to our regular, and I can deal with it later on. And there we go. We'll put the ES back. Ugh, the magic of being able to maneuver all those things. It was pretty clean though from 5K action. I mean, you ended up with a lot of cyan under. Every time you ended up with a DOC spread, you had it coming with steel from below, and it's just a matter of waiting for that crossover point and the orange dip, and took place well right about there. That started another wave. And again, it stayed under. Small DOC spread started right there, but again, steel from way below and immediate pop back up, and cyan under red, and pretty much stayed that way all the way until just about now. And you're going to get the same situation here, where the steel is going to crop up. This is a little bit more of an extended move, so fits right within that expectation. And not a surprise, this is sort of that refill of what happens during the holiday break, and so that's all we are, is right back to the lows of that previous move. There's plenty of positive extremes, so I mean, anywhere you want to start drawing lines, it's now appropriate. Since we're at new levels here, we can start to pick the major zones where we can see the original breakouts of some of these moves. Right like that. And then just we add a few. Bingo. And so those will be the intermediate pullback areas. If the signal continues to deteriorate, it's going to be already a reset. I mean, you already have green already below the negative 13.5. So I would expect that we're going to push back up a little bit later on this. So we'll see. It's going to be late because it is obviously the Friday post 4th. Not expecting a whole lot. But we'll see. You can always get a transition. The interesting thing is now we have all the new fund money coming in. And after that, well, probably by Monday with the new fund money coming in, it's going to have to be allocated somewhere. And so we'll see if we get a little bit more of a dip here before that new money wants to start coming in. They've made it kind of tough on themselves here because this push towards the 3,000 means that we're either moving to that 3,022 to 20 plus range pretty quick, or we're going to pull right back down into the mid 29s. So we'll keep an eye out for it. Anything interesting that pops up, we'll certainly attack. Let me go ahead and put up a 50K. So here was that 50K from before that we had talked about transitioning into right at the bottom as we were seeing that dip. And pretty much we've stayed quite even with it. It's still keeping it cyan under red right at this last series of breakouts from the 70 all the way to the 3,000. So for those readings, pretty darn consistent. No objections to any of it. As always though, trade well. I'll put up any relevant charts. Talk to you later.